Hello, good morning and welcome to ET Now's The Newspaper Show along with me, Varun Hiremat. For the next half an hour, we'll be walking you through the headlines from the Economic Times as well as the Times of India. By now, you're well aware that the newspapers are completely safe and all our personnel are taking the utmost care with sanitization at the presses. So please do order your paper to your residence once again, and you can do that by going to wantmypaper.com, where you can explore all the delivery options available for the same. I repeat again, wantmypaper.com if you are interested in getting the newspaper delivered to your residence. With that being said, let's now get a move on with the top 10 stories of this morning, and we have a lot lined up for you, beginning with the fact that invest in India, a nation you can trust, says PM Modi. Fiscal stimulus plan to revive growth, says the CEA. India and the US need to boost their ties, says Pompeo. India keen to join the WHO GAVI alliance. SII can supply 400 million doses by December, says the CEO. RIL market cap tops Oracle, Chevron and Unilever. RBL Bank to raise 1,000 crores via preferential issue. BSNL plans maiden bond issue to raise 8.5k crore. Local shutdowns trigger more GDP downgrades. And finally, COVID call, NK Singh for relaxing fiscal norms. We're now, as we always do, going to bifurcate the stories via market and corporate. And let's begin with the market stories. Listed auto companies face 10,000 crore of losses. Minimum 10% of MF corporate bonds trade via exchanges. L&T Q1 PAT and revenue slide, no guidance from company. Bajaj Auto logs profit on better realizations. And gold hits a record high of 50,019. Okay, those were the market headlines. Now time for our corporate stories. Probe likely to flag 4,000 crore hole in CCD books. India's lockdown hits Coke's global sales. Retail business down 64% in the first half of July. SC directs the IT department to refund 833 crores to VIL. And Punit Goenka resigns from Zee Media Board. Okay, this morning's market is going to take cues from medical companies and medical developments. There's been a major development on the vaccine front in the US. Just yesterday, the government of the United States has agreed to pay Pfizer up to $10 billion for their vaccine, which they will build in conjunction with BioNTech. Now, the vaccine will be ordered for across the United States, and that's what's really keeping that market upbeat, right? But there's a lot happening locally as well and all over the world, not just in the United States. India has expressed its interest in joining COVAX, the WHO GAVI COVID-19 vaccine alliance that aims to bring countries and companies together to pool resources and share vaccine development risks. So that's really interesting. There's a mass body now being formed across the globe, like the G8 or, the United Nations, whatever you want to call it, specifically for developing a vaccine, and India wants to be part of that. Also, coming into what the Serum Institute will do and the role it plays in all of this, the Serum Institute CEO said that they can manufacture and supply 400 million doses of AstraZeneca's experimental COVID-19 vaccine in India by the year end, subject to regulatory approval from Indian authorities. So We've been covering this extensively. Pankaj has, unfortunately, he's not with us this morning. Otherwise, he would be able to walk us through all the nitty-gritties of, how long these approvals take, how likely it is that we'll be getting it by the stipulated time period. So maybe we'll hear from him later on in the day regarding that. But this story is on page 1 of the Economic Times. And basically, Serum Institute is one of the leading vaccine producers in the world, let alone India. And 90% of the vaccines in the world, something like that, are made in India. So we will be spearheading the production. Now, who ultimately supplies the know-how, whether it's a Pfizer or AstraZeneca, we don't know. But we will be actively part of the vaccine thrust for COVID-19. So that was a little pharma medical development update for you that is going to positively invigorate markets. We already saw that in the US yesterday. But coming back to something more domestic, and our Prime Minister was talking yesterday, and again, this is on page 1 of the Economic Times. And PM Modi hard sells India story to American investors. Speaking at the US IBC event called the India Idea Summit, PM Modi says there's never been a better time to invest in India than now. PM sought investments in healthcare, energy and infrastructure. PM Modi also said that the Indian economy is now more reform-oriented, and that is for sure. And that open minds can make open markets, which in turn lead to greater prosperity. Coal sector's been opened up. They're looking at divestment. The government is definitely prone to reform, and he's trying to communicate that to American investors. So hats off to our PM for that, and it's something that should be played back on your channel later today as well. With that being said, we're now going to move on to our next story, and this is on page 2 of the Economic Times. And pitching for US-India partnership at US IBC, that's the India Idea Summit that we just spoke about, the US Secretary of State, Mike Pompeo, said democracies like India and US should work together. So here's a US official saying that he wants to enhance his relationship with India, and Pompeo, nonetheless, a very loud voice. He went on to appreciate India's move to ban Chinese apps post the Indo-China clash in the Galwan sector. Hitting out at China, Pompeo added that the Chinese hegemony in the region should be challenged. Let's listen in. Okay, unfortunately there was no bite there for you, so I'm sure they'll play it back later in the day. But Economic Times page 5, L&T put out its numbers yesterday, and it was a better than expected performance for the first quarter, beating the street estimates. But the management declined to give any guidance for the full year, citing uncertainties due to the COVID-19 pandemic. Avan Dabash, who tracks this company very closely, is now joining in to give us a review of what the results were. Good morning, Avan. Over to you.
Well, it's been a weak set of earnings for L&T in the quarter gone by, and not surprising because there have been execution challenges, labor disruptions, there's been disruptions in the supply chain, and all of that seems to have eaten into the quarterly numbers. So while the revenues are still above street expectations, they're down 29% on year to 21,260 crores. Profits well below expectations at 544 crores, down nearly 69% on a year-on-year basis. Margins as well have come in very disappointing at 7.6% versus 10.3%. Now, there has been, the lower revenue, credit provisions in the financial businesses, under recovery of overheads. All of that really seems to have impacted the quarterly numbers. The company has bagged orders to the tune of 23,579 crore rupees. That has been low by 39% on year, but the consolidated order book still stands healthy at 3.05 lakh crore rupees. Now, in terms of their segmental performance, it's been very disappointing across the board. There's been a double-digit decline in all of the segments, particularly infrastructure, power, heavy engineering, defense, and hydrocarbon, which contribute a bulk to their revenues. The restricted availability of labor, sites operating at suboptimal levels, deferment of awards from the Ministry of Defense, as well as a decline in their manufacturing activity. All of this contributed to lower order wins within the individual segments. But a silver lining within the IT and TS segment, where the revenues have grown nearly 58%, led by consolidation of Mindtree and the growth in L&T Infotech. The management did acknowledge that this has been the most unprecedented quarter, and they are looking at managing their order wins despite the slowdown, and the order book has remained rather stable. 65% of their orders have been from the domestic sector. They have managed to salvage their margins due to the cost control. They've lost nearly 12,500 crores worth of revenues due to the pandemic, but they say the entire 3.05 lakh crore orders are workable and will be executable. They continue to refrain from giving a guidance, saying that it's a very uncertain environment as of now, but they are optimistic that the domestic sector will pick up going forward.
Thanks for that, Avan. A muted quarter for L&T. Let's remember, L&T has built our nation, and it does build our nation. So if there's a slowdown across the board, of course, you're going to see some impact there. But like Avan flagged off, various reasons for that and some optimism too in the longer term. So thanks for that, Avan. But let's move forward. Page 2 of the Economic Times. The US conveyed China to close its consulate in Houston, further deteriorating bilateral ties. And Beijing is likely to consider shutting the US consulate in Wuhan in retaliation. US Secretary Mike Pompeo has repeatedly accused Chinese theft of intellectual property. So this was the one negative force on the markets yesterday. This US-China tension really seems to be escalating in one way or another, and it's going to keep global markets on their toes, as these two are the largest economies in the world. But with that being said, let's now come back to something a little more domestic. Poonam's also with us. Good morning, Poonam. Welcome to the show. Localized shutdowns across the country in the past few weeks have triggered another round of downgrades in GDP estimates for FY21. So could you walk us through the numbers, Poonam?
Yeah, hi, good morning, Varun. In fact, yes, what we understand is there are various states which have started doing localized shutdowns very recently, Bhopal being one case as well. I would say states as well as cities. Now, if we are looking at the overall GDP estimates or expectations, what we understand is various rating agencies as well as few top economists have gone ahead and started further downgrading the estimates. Majority of the estimates for the economists for FY21 GDP were somewhere around 5%, but now we understand that the steepest decline in terms of GDP is expected as much as a decline of nearly around 9.5%. Cities such as Bangalore and Pune have been almost forced to impose closure on account of the rising COVID infections. We also understand that other states, for example, Maharashtra, Madhya Pradesh, UP, Bihar, Orissa, Tamil Nadu, Karnataka, all these states have imposed local lockdowns in various forms in the month of July. I think I would add Goa as well to this list. Rating agency like CARE as well as ICRA have downgraded their GDP expectations along with HDFC Bank. ICRA now expects the GDP to contract by 9.5%. CARE now expects the GDP to contract as much as 6.5%. In fact, HDFC expects GDP contraction of 6.5 to 7%, and they state that apart from rising cases, the dispersion of infections into more vulnerable areas is concerning. They do state that there are various states which are highly vulnerable, for example, Bihar, MP and UP, which are associated with less developed healthcare facilities than the initial hotspots, and dispersion there could lead to high rise in cases across the board. Rating agency CRISIL also has stated that they would be revisiting their forecast. In fact, Nomura also has gone ahead and further downgraded the GDP expectation at 6.1%. So yes, Varun, there are expectations that we may see further hit in terms of the economic activity if the cases continue to rise and if states or cities go into localized shutdowns.
Oh, you're absolutely right, Poonam. Thanks for bringing us that update. Now the moratorium is going to lift. We're going to figure out who can actually pay back. There's some 65 million or 45 million jobs that could be lost or that are still lost from pre-COVID levels. And now 61% of MSMEs in the next story apparently are not in a position to service loans from September. So, coming back to what I was just saying about the next story, non-performing assets in MSMEs are likely to increase, and the businesses are expected to cut more jobs over the next month. As per survey, nearly 45 million jobs are expected to hit the end or to hit by the end of August rather. So far all the news flow has been about recovery, coming back to pre-COVID levels. Now we might just see a turn in all that once we really digest what's happened to the economy in the last 6 months, and that data will now start to come out. But with that being said, let's get a move on. Back to page 1 of the Economic Times, and an important story which my colleague Vivek is going to walk us through. A probe into Coffee Day Enterprises is expected to reveal details of suspicious circular transactions between Mysore Amalgamated Coffee Estates, a private firm of the late VG Siddhartha, the owner of Coffee Day Group, and various group companies. So good morning, Vivek. Welcome to the show. What does this mean for Cafe Coffee Day investors? What does it mean for Cafe Coffee Day creditors? And how is this story supposed to be viewed?
Well, good morning, Varun. So today, what has actually happened is the Economic Times has gone ahead and reported what they expect to be details into some of the transactions that were done between a private firm of the late VG Siddhartha, who passed away in a very unfortunate circumstances, and various other group companies of the entire Coffee Day Group. So now these are expectations that the Economic Times has reported. We are still awaiting any sort of details after the probe by the regulatory authorities. So what ET is saying is that the probe most likely could flag off close to 4,000 crores of transactions that may not be completely explainable according to them. So what they're saying is that they are saying that close to 3,500 to 4,000 crore could be missing from the books of the listed entity, which is Coffee Day Enterprises, due to these transactions. Now, why this becomes important is that, Varun, as you rightly highlighted, a whole host of tertiary impact would be seen as far as the entire banking sector is concerned. Also, remember, Coffee Day Enterprises, despite its assets, is actually looking for certain stake sales to go ahead and replace lenders. Also, it remains to be seen as to how exactly they would look to continue to stay in business. And remember, they also have other group companies in which are listed, in which there could be repercussions felt. Now, remember, the investigation is being conducted by former Central Bureau of Investigation Ashok Kumar, and also Avastha Legal M.R. Venkatesh. Another impact or another fallout could be the role of private equity investors, and that too is most likely going to be revealed.
Okay, great. Thanks for bringing us that very important update, Vivek, as always, and all eyes on CCD counter today when the markets open. With that being said, let's get a move on. We're going to switch quickly to the Times of India. And I don't know how many of you are missing the gym and working out, but I definitely am. So it comes as really good news that the Maharashtra government is readying SOPs for gyms to reopen and ruling out any more large lockdowns. According to the Times of India, the Public Health Minister Rajesh Tope confirmed that the state is finalizing standard operating procedures to soon restart gyms and other establishments with physical distancing. He also said that steps likely opening of shopping malls and allowing increased attendance in offices would be considered. So it seems that we're really unlocking now. Your gyms in your local community might open up soon. We'll be waiting and watching for that. Finally, before we let you go this morning, I think we're coming to the end of our show. We're going to quickly give you the top 5 headlines from the Times of India, beginning with the fact that India has added 46,000 cases and there's a spurt in many states. Maharashtra is now readying SOPs for gyms to open, like we just told you. 15% pay hike for PSU old private bank staff from 2017. PM had 50+ meetings in 1 month on reforms. And Mukesh Ambani becomes the 5th richest person in the world.